up 5%, a whopping 5%. I can't remember the last day we saw that. Clearly a big bounce back after last week, but it's continued today. Let's kick off with Mark Otzwald, Chief Economist and Global Strategist at ADM Investor Services International. Mark, good morning. It's a bit of whiplash. Ultimately, welcome your reflections on August as a whole as we come back after a few weeks in which oil prices dropped dramatically and clearly are having a fight back this week.
Yes, I mean, I think there's sort of two key drivers here. One, the market was somewhat wrong-footed by the whole Delta variant developments, above all in Asia, particularly when China started clamping down on activity in its ports and its airports, implying very much reduced demand, and you then saw explosive growth in cases in Southeast Asia, and obviously the pickup we've seen in Australia. However, we still come always back to the same old syndrome that whenever you have a correction in risk assets and so-called safe assets go back to, become even less palatable as an investment, people then start looking around for opportunities. And anyone looking at the commodity space, even with the rise that we've seen with a lot of commodity prices, be that oil, agri, metals, will still always come back to the idea, well, on a relative basis, they're cheap. And so what happened yesterday didn't really surprise me at all, particularly as within the context of, if we're going to have slightly slower growth, bad news. Bad news is good because it means then we push back on that taper timeline, which Mr. Clarida's comments from 3 or 4 weeks ago helped to push markets down a bit. But then we go, good, lower for longer means more hunger for risk assets. So we're still caught in what I would call a case of the dog biting its tail in terms of asset market performance, and that applies across the board.
Let's bring in from India Narendra Taneja, India's leading energy expert. Narendra, the news out of Asia in recent weeks has been very much glass half empty, particularly China looking an uncertain player at the moment. But then we see that's changed this week a little bit. We saw out of China getting the COVID outbreak under control, India reporting very positive data numbers from travel, internal travel, external travel, and so forth. What is the case in India at this point now, end of the summer? Has India got on top of this COVID outbreak?
Yeah, as you mentioned, we closely watch what happens on the other side of the Himalayas, that is China. But on this side of the Himalayas, there's India. And when you look at the energy landscape, it looks pretty encouraging in the sense that offices have reopened. People are in good mood, like in New Delhi, where I live. Cases are down to just about 18 yesterday, which is extremely encouraging. And so, which means we started going out to restaurants, to hotels, and started flying, and started meeting, inviting people over to our offices, and so on and so forth. So it's almost back to normal, which is extremely encouraging. That also reflects, if you look at, for instance, the sale of petrol, the last 15 days in particular, the sales are up 3.8% compared to the pre-pandemic quarter, which is very, very, very encouraging. Diesel is also doing very well, still struggling in terms of if you compare with pre-pandemic quarter, but doing fine in the sense that the sales are picking up very, very fast. So overall, when you look at the picture, power consumption, diesel consumption, petrol consumption, solar power consumption, the picture is pretty encouraging, I would say. And therefore, when we look at the landscape in 2 to 3 months from now, it looks like that things are going to look even more better, because we have already vaccinated close to 600 million people. And day before yesterday, we vaccinated 8 million people in one day. So that's a kind of world record. And the fact that we produce our own vaccine, manufacture our own vaccine, is a tremendous, tremendous help. So our sense is that probably there might still be kind of a third wave, so-called third wave, but the country is very well prepared, businesses are prepared, energy sector is well prepared. So even if it comes, we expect that probably it will be more manageable. So it looks like coming 2-3 months, things will start getting better. But as I said, this coronavirus is a kind of creature you can't predict. So we still keep our fingers crossed. But while the fingers are crossed, we have started flying.
Well, let's go to Muscat. Ali Al-Rayami, consultant and former Director General of Marketing at the Ministry of Energy and Minerals in Oman. Overnight, Ali, also positive news out of Muscat. They're opening up their border, I think, to something like 30 countries for travel. Generally, things moving in the right direction there.
Well, thank you very much, Sean. And yes, indeed, the things and also the news that we got from the Supreme Committee day before yesterday or yesterday, it looks very positive. We have already started seeing some changes when it comes to traveling process. So that is overall, it's a good news. I think now, not only 30 countries, but everybody, all the countries are allowed to come in as long as the passengers are vaccinated with 2 vaccines. And that is open now for all the countries. And of course, they have to check and do the PCR. So once it's negative and you have vaccinated for 2 vaccines, then you are allowed to come in without any constraints and on any kind of quarantine. So that is a good news. I mean, hearing from India also is a very good news. So I think we are moving forward and things are getting better. Let's hope that that is going to be reflected in the oil energy and also in the oil price in particular.
Well, it's certainly been reflected in the oil price this week after a dramatic sort of drop over the 2 weeks in August. Even so, to the extent that we were talking on Sunday whether OPEC should be reacting to this drop in prices. Ultimately, Ali, we've seen OPEC increase, according to their plan, 400,000 barrels per day per month starting in August. Until all of these cuts have been brought back to the market. I welcome your thoughts on that strategy. Obviously, last time we had you on, it was in the middle of that big wobble disagreement. Obviously, they got through that. Your thoughts on the decision that finally came?
I'm not very much optimistic about the price and the changes in prices between last week and this week. And we will continue having this kind of limbo between coming weeks and coming months.
It's quite dramatic, isn't it? I mean, when you see the change.
And for countries like us, it's not healthy. I mean, we are very much depends on oil price for our budgets and also for our future expenditures. So when you have this kind of fluctuations in price, then planning it's quite difficult. So we want to see some sustainable, price the coming month. But I don't think that we will have that kind of situation very soon. Regarding the decision, I think also I was not really in favor of increasing 400,000 on a daily basis for the coming 6 months or 5 months. That is too much. I don't think that the market is ready to accept the extra volumes that they are going to come from OPEC. But nevertheless, I mean, that the decision, water under the bridge now, and let's wait and see what's the impact that this increase will have in the market, especially that, coming next year, that we will start, implementing the new baselines for few countries, and that also will increase the production from Saudi Arabia, UAE, and Russia, and so on. So I'm really trying to see if there are any positive indication from the decisions from OPEC. But let's wait and see. Let's hold our guns and not really make any noise now. Maybe they are correct, but I don't think that we are now ready to see any too much, increase on production or increase from OPEC Plus in particular. Especially the prices, it doesn't really encourage us to do so.
Mark, the sort of surprise maybe that the market is facing is less about where is the US and Europe going. Clearly, they're on a path that's fairly well anchored now, living with COVID, economic performance going strong. Asia is the question. China, in particular, the big juggernaut. All the data points there are somewhat downward when it comes to oil consumption. What's your read on what's going on in China?
I mean, I think that the real point is that consumers, and I think it's probably something which we can extrapolate from the rest of the world to the rest of the world, is that consumers, yes, there's been a bit of a pent-up jump, but there is a good deal of caution. Interestingly, if you look at some of the numbers coming out of the US, and this is also true of China, the real telltale sign is that retail sales are still running at roughly half their rate that they were prior to the pandemic. That sort of indicates a degree of caution. And in the US, it's interesting that mobility numbers indicate a fairly sharp tail off as you've seen spikes in individual states. That to me, and above all, in terms of China, you've got two aspects which are worrying. One is that the private consumption is weak, but also all these clampdowns, all these interventions, particularly in the commodities sector. They've been clamping down on export quotas, on import quotas. They're now intervening all over the place in terms of iron and steel. They all point to a somewhat lower trajectory. I think that the difficulty here in terms of the oil market, obviously, the fact that we're not getting the sort of pent-up demand is probably an overall negative. In terms of the global growth prospects, actually, I think there's a small positive to read in here. I think it's better if we have a lower trajectory for global growth, in part due to all the supply bottlenecks that are there, than a big spike and then seeing things tail off. Because the bigger the spike we have in activity, the more likely we're going to get inventory buildups. And this applies as much to oil as pretty much any other resource, and indeed finished goods, which will actually might lead us to a situation where we have a good old-fashioned inventory boom bust scenario. So I think the lower trajectory is still quite good. We still have to manage with how we exit a lot of the extraordinary measures, whether they're fiscal or whether they're monetary, and that's a whole big hurdle coming up over the next year.
Over the next few days, perhaps. Narendra, the big story over the last week, the tragic developments in Afghanistan, sitting in Delhi, sitting in India. What is the perspective of the fallout from Afghanistan, and how significant do you think the ramifications may be?
Well, Afghanistan has been an extremely, serious development in our part of the world. As you know, when you look at the map and the geopolitical parking of Afghanistan, it's like a junction that connects South Asia with the Middle East on the one hand, and South Asia with the Central Asia on the other. And all these Central Asia, Middle East, very important for us in terms of energy production. And when South Asia, one of the major markets in the world. So therefore, what happens in Afghanistan may not reflect in oil prices now, but if Afghanistan situation gets out of the control and Afghanistan goes up in flames, this one way or another, it is going to have an impact on oil prices and overall oil and gas geopolitical landscape, which will start reflecting in terms of prices time to come. Because you see, our fear is that Afghanistan will be back to, their DNA hasn't changed. They're the same people, the same mindset, which means that, very soon they will allow sanctuaries to organizations, like ISIS. And, there's so many of them, and there probably will be new ones which will come up there because they provide the right ecosystem and the support system there. So our worry is that maybe 5-6 months may look fine because they are investing a lot in terms of the right communication, speaking the right language, probably helped by some people from outside Afghanistan. But the problem is that, once 6 months they are settled, they will be back to their normal self. And that means the whole area, which is so critically important when it comes to energy, will basically be start looking the same, which means many sanctuaries, universities training these people and exporting terror. And when you start exporting, the nearest geographies are in the Middle East and Central Asia, of course, India, and several other countries. So when you look at this, when you take a realistic view, which we do from New Delhi because they're just next door. Let's not forget Afghanistan. Big parts of Afghanistan used to be part of India 2,000 years ago. It was just India. It was all India. And even the biggest mountain there is still called Hindu Kush for whatever, historical reasons. Now, the point here is that, our worry is that we wish the best. We hope democracy will succeed. But when we look at the landscape realistically, serious worries about what's going to happen in about 2 years from now, and the implications and, of course, ramification for all those people who are, and the players who are in the energy sector, particularly oil and gas.
But of course, this was not, obviously, it at the last minute, it became a shock to everybody watching. But ultimately, this has been flagged for some time that the Americans were going to pull out of Afghanistan. I'm wondering, Narendra, as we have here in the Middle East been struggling to read the tea leaves and accommodate sort of an American withdrawal from the Middle East over the last 10 years, or at least the impression that America is stepping back from a front foot position in the Middle East, it now might appear that America are pulling back from, obviously they're definitely pulling back from Afghanistan, but ultimately leaving the problem to the players in that region, including India, Pakistan, China. This is your problem now. What does that imply? What does that sort of leave behind, the idea that now Central Asia are going to have to deal with the same concept of America withdrawing, the policeman is going away?
Well, a very good question and good take. This is what exactly worries us. We all know that the U.S. is going to pull out of Afghanistan sooner or later. I mean, they've been talking as of day. But what we didn't know, let's say in New Delhi or many democracies in Asia, that democracy infrastructure that they've been building the past 20 years was so weak. We didn't know that. I mean, the Parliament House in Kabul was built by India. That is a building that we paid for it, we built it, hoping that democracy has come to stay there. And we thought that American intelligence was smart, among the best in the world. And so now we realize all that they did last 20 years, the great United States of America was all fake. Imagine it came down just like, House of Cards. And so that's our worry. So on the one hand, America pulling out of Afghanistan, creating this huge vacuum. At the same time, America now, America's image as a superpower, as a country that has strength, that has economic power, that has military power to do something effectively in any part of the world, that has suffered a serious jolt. Now it has become a joke, to be very honest with you. Now the point is that if they do the same in the Middle East, or if their appetite to play an effective role in the Middle East goes the Afghanistan way, what will happen in the Middle East? Middle East, we don't think we don't think they're prepared yet. To, for instance, to deal with a kind of vacuum that almost looks like on the horizon. China won't be acceptable, and China is not the United States. Russia is a very weak economy, much smaller than even India. Now, the point is, if that vacuum comes and they're not prepared, they're too busy either selling oil or enjoying good life in southern France and Switzerland, with all due respect to them, because there are many people who are working very hard on the ground in the Middle East. But that's the kind of image people have. Now, what would happen to that? Of course, that's an area of tremendous worry for India, because if we see this kind of vacuum and geopolitical vacuum, and therefore kind of chaos in the Middle East, which is a critical region for us in terms of oil and gas, and also otherwise, also in terms of market, we have 8 million people, Indian origin people living there. So it really is giving us sleepless nights. The U.S. under Biden administration, the U.S. as a whole must reconsider. When you are what you are, a big country, a big economy, the so-called superpower, you just can't say, look, we are not interested. We are not really interested in what happens in the Middle East. They must stay put in the Middle East. They must strengthen their, forces in the Middle East, and they must tie up with other democracies like Japan, like Australia, like India, to make sure that the Middle East does not go the Afghanistan way. If that happens, the entire world will have to pay the price. Only one country will be responsible for that, and that's the U.S.
Yeah, that is a red flag of warning there. Clearly, this is an issue that we're all going to have to sort of keep watching and interpreting, because it is a trend line as such over many years now. It isn't just a singular moment. Ali, back to at the ranch, so to speak. oil production capacity increases. As you mentioned, the quotas are for April starting the new level, if you like, but ultimately no country in the region here at least is waiting. Capacity has been invested into. Do you expect that there will be competition in the new year with returning production from the likes of shale and other higher cost producing areas at the same time that the Gulf producers are also adding capacity?
Well, the competition is already there. I mean, with or without the shale oil. I mean, the Gulf states and the producers from the Middle East, they are already competing for the same market. So this will just add more, more issue and more problems when you allowed, if the Americans' shale oil will produce and go back to whatever production levels that they had 2 years or 1.5 years ago. So that will just add another extra problem to the Middle East producers, but the competition is already there. We see every day that we are competing in the same market. But that is not really my problem. My problem is that we see a lot of productions coming from different places and going to the same market. Demand, I'm not so sure. I mean, are we really talking about high demand, especially that the fourth quarter and next year's first quarter that we are getting into the winter, winter time, and we know that during winter that the demand is lower. So my worry is that we have to be very careful when we talk about extra productions starting from next year, starting from this year onwards. So we have to be careful, and OPEC Plus they need to also to be careful not to allow production to go beyond, and then we go back again to the levels of lot of volumes in the stock market, in the stock, and that is what worries me basically. The competition is very healthy. I mean, this is good for everybody.
Well, let's go to the survey question for what I think might give the market direction over the coming period is what tone will Jackson Hole deliver? The meeting this week, at the end of this week, as it turns out now, a virtual meeting, but at Jackson Hole, Wyoming, where every August the leading central bankers of the world gather to give their sort of outlook for monetary policy. And the expectation as recently as last week that the Fed in Jackson Hole was going to make a firm commitment to taper, to stop the easy monetary policy and slowly pull back into a restrictive one. So my question is that what tone will Jackson Hole deliver? One, they will commit to taper, commit to tightening. Number two, a firm no. They'll firmly say no, it's not the time to talk or to commit to taper. Or three, they'll kind of wishy-washy fudge their way down the middle without indicating either direction. What's your thoughts? The central bankers of the world meeting virtually Jackson Hole this week. What tone will they set? Welcome your views on that and go around the table. Mark, your thoughts on that question and its relevance, perhaps. Is the tone even relevant, what comes out of Jackson Hole, and what tone do you expect?
I'd probably opt for number 3 on that list. I think the biggest problem that we've got two problems. One, we need to judge how much influence Mr. Clarida has, which is enormous. He has taken a somewhat less dovish, and I stress less dovish rather than hawkish shift. So he is a little bit more concerned about inflation. He brought forward the timeline for rate hikes. So that could be signaled. But I think overall, in terms of markets would really like, a date. Markets always like something very, very firm. And what they're probably going to get is, well, we'll keep on discussing the timeline for a taper over the next few meetings. They'll probably say it's encouraging, but we're not quite there yet. So, it is important in the sense that a lot of risk assets and commodity prices and global growth prospects, basically in the market's eyes, hinge on what happens with central bank policy.
It has been the gift that keeps on giving.
It's the gift that keeps on giving, and it's also the gift that keeps on pumping up any asset prices that you care to think of. And one has to remember that even if they do taper somewhat, we're not going to be out of the taper until somewhere in the middle of the next year. So we're still always going to be going back to this. But all these safe assets are uninvestable. So let's go and have a look at other prospects.
Narendra, what does it mean for India? Inevitably, we started our conversation earlier this year with India forecasted to have a whopping sort of 10% growth in the next fiscal cycle. What's that outlook look like now? And would a tapering be healthy to sort of calm things down a little bit?
Well, I clicked on number 3, as you can see. I mean, if not 10%, we'll probably be in the region of 9%, maybe 8.7% and 9.2% in that region, which is pretty okay, because as I said earlier, the overall sentiments are very good. But at the same time, we realize that pictures in some other parts of the Indo-Pacific and Asia regions, it seems to be a little bit hazy. For instance, China. I mean, reports that we have from China is that the problem is with the vaccine. Vaccine is not effective enough. That's why all these problems in China, and especially in the countryside and in other parts of the world, the quality of vaccine. Probably China should admit and go and seek vaccines from the West or from India. You know, they must admit the vaccine is just not good enough. So I think they and some other countries also imported vaccine from China in Asia are facing the same kind of haze. So we think that, you know, in Asia there is a kind of it is all one way or another actually linked to the quality of vaccine. So it's a new debate. Not vaccine is not enough, the quality of vaccine. So I think that will have the reflection on what happens overall. If China is not doing well and some other geographies, economy is not doing well, of course it will have effect on India's economy as well. We live in a very independent, interdependent world. But my sense is that since India's GDP is largely driven by domestic demand, so we are going to see probably a better picture. India, by over the coming months, is probably going to look much better, much more healthier economically than we thought even 6 months ago. And that's, as I said, the overall sentiment is pretty good. But as I said earlier, that we are vaccinating millions every day, insisting on one thing, that wear your mask and go back to the normal business. But keep in mind, keep your fingers crossed, because this creature is unpredictable. But my sense is that by Christmas, we will have roughly 80% people at least with one dose all around the country. And that will probably help us to boost economy. And because the best cure you have, the best stimulus that we can give to our economy in India is vaccine. And that's the government focus. So 80-85%.
What is the dominant vaccine? What is the dominant vaccine you're using in India?
Good question. You see, dominant, I would say, is Oxford, AstraZeneca, which we manufacture in India, and supported by Covaxin, which is developed and 100% in India, which we are also exporting to, among other countries, Iran. And then we also have now 2 more candidates, which they just got the license. So in total, we have got now 5 vaccines. Out of these 5, we also have Pfizer coming in, Moderna coming in. We have opened the door. So whosoever now Sputnik is doing very well in India. We started manufacturing Sputnik also in India. So the government target by March 2022, every single Indian would be vaccinated, fully vaccinated. And we think that's the best stimulus, best strategy to make sure our economy fully recovered and is back to normal.
Let's get the survey result and give Ali the last word this morning. Wishy-washy fudge is what we're going to get from Jackson Hole. Ali, the volatility we're now seeing in the oil market, obviously last week, the 2 weeks, big drop, $10. Now, the first few days of the 2 trading sessions so far this week, we're up nearly $5. After a long period in which oil markets were pretty stable with very tight bands, now we're seeing maybe the start of a wider volatility. Your thoughts on the outlook for the markets in this coming week?
I think will continue. The situation is not very clear yet when it comes to new variants of COVID-19 cases. Although that we hear good news from India and from China, but the new variants, Delta and other, I don't know the names, Lambaba and Delta, they are new. So the impact of those new COVID-19 variant will be there, and they will have. We don't know what is the impact of those will be to the countries. But I'm expecting to have this kind of fluctuation continue for the coming few months until the end of until the end of this year at least. But unfortunately, the last few days we have started seeing a lot of or big gap between the changes basically. To me, 65 to 70 is the right price to expect.
Right. It's a good sweet spot for this current cycle. And I suppose until we sort of get out of this last week of August, and as they say in the US, after Labor Day weekend, and that's also after Jackson Hole meeting, where there is some clearer direction, my sense is that Jackson Hole may send the markets on another tear that will distort what the sort of tea leaves are telling us. But nonetheless, that's what the sentiment is this morning. Keep your eyes on the pre-Jackson Hole noise. Thank you, Ali, for your thoughts and insights from Muscat today. Mark as well, and Narendra from Delhi. Thank you so much. Really appreciate it. We'll keep an eye. But this morning, markets are opening in Asia up a little bit after yesterday's big rise, 5%. Let's see if it continues. All the best. We'll catch up with you in the coming days every morning, 10:30 UAE time.
Thank you.